It's only entertainment.
All right. Welcome back to the Talking Hedge. I'm Josh Kincaid, capital markets analyst and host of your cannabis business podcast. Today, we've got the CEO, chairman, and founder, Jim Cacioppo of Jushi Holdings. Jim, thanks for being on the Talking Hedge.
Thank you, Josh. Thanks for having us.
Appreciate it. How did you become the CEO of Jushi Holdings? How did it all get started?
So, I had a long career in the hedge fund business. I ran two large hedge funds, 5 billion and 5.5 billion, 2.5 billion. And I came down to Florida 7 years ago and decided to sort of chill out. And cannabis investing came to me. People were like, hey, you should take a look at this in around 2015. And I invested through the fund in about 25 different cannabis investments. And then at one point, I decided the best opportunity was the U.S. multi-state operators, but at that time, there were no great available companies with good management teams. So I thought the best investment opportunity was to actually start a company, and I brought a bunch of people together to start Jushi.
So you created a multi-state operator out of Florida, one of the states that still doesn't have like a strong, rec market. The medical market is even a little rougher. And so are you anticipating that market to open up, or is that just a place that you decided?
Well, Florida, I live in Florida. So we started the company in Florida because I live here, not because we have operations. We do not have operations in Florida. I think the medical market's actually quite strong in Florida. It's just very concentrated at the top. So the top 4 or 5 companies do very well. One of the reasons why we're not in Florida is the way the program is written. It's hard for the late adopters, where in other states we went to, we felt that it was much more even playing field. So what you'll see in Florida, pretty well-developed medical market, bigger than our biggest state, which is Pennsylvania. And it's a bigger state. It's 21 million people versus 13 million people in Pennsylvania. Pennsylvania is pretty close to Florida in terms of patients. It's not that far away compared to population. And Pennsylvania started later. So I like Pennsylvania better than Florida. But the problem with Florida is truly that's 50% market share. And the way the state regs work, being a vertical company without wholesale markets, so you can't buy or sell cannabis in a regular way with other operators. So there's this big premium on really focusing on Florida, all of your capital. So Florida was kind of, if you even look at the big companies, the biggest companies like GTI as an example, they haven't spent a ton of time building out their Florida operations. I think they will shortly, but they haven't yet because it's a big capital hog and there's been better markets, although I think Florida is a very good market.
Viridian Capital said that you guys are going to have significant acquisition in the near term. You guys have already had some acquisitions. That's how you got into Pennsylvania. Are you guys going to be looking to the south in like places like Puerto Rico, for example?
No. So our states right now are Pennsylvania is our number 1. Number 2 is Illinois. Number 3 is Virginia. That's the main game at Jushi. And then our 3 smaller states are Ohio, Nevada, and California. So we have 6 states. We announced a deal that's not closed yet in Massachusetts for a company called Nature's Remedy of Massachusetts. And we're very excited about that deal. So that's our first acquisition that we announced this year. And I think we'll announce some more, and I think they'll mostly be in well, we actually announced a second deal. We're acquiring a grow in Ohio. We have a manufacturing facility, now we're acquiring a grow. So there's 2 deals we announced this year. I think the other deals will be primarily, I believe, in the states we're already in, although we could do a new state at any time. But I think we're going to be in states already in, and just we believe in sort of getting big in the states we're in. But we very well could get started on our 8th state because we have 7 with Massachusetts. But we're not focused on Puerto Rico. We do, however, have some international exposure through Portugal. We have a 51% ownership in a grow company, and we're in the process of financing that and building out a grow in Portugal.
Interesting. California, you're in. That's the world's fifth largest economy by GDP. Pennsylvania is still kind of emerging. Virginia hasn't done anything. Ohio, not much. But those are all kind of red states, I think. And so I'm interested in Virginia. Are there any states that you're excited about that you're in that you're looking to kind of expand or?
Well, I think. Listen, I mean, if you look at our top three states, Pennsylvania, I think everybody thinks it's been the best medical market thus far of any medical markets. It's growing very, very fast, very high adoption rates. The government did a great job of including the doctors and the medical community in the program early on, so they felt comfortable with prescribing it. And then the law makes sense because there's enough grower processors to have a good wholesale market, but also not too many to not allow the early adopters like us to really, put a lot of money into it with an idea that we'll be able to generate a good revenue and good margins. On the store side, similar as the grower processors, there's about 210 stores right now that you can open up, and more than half are already open. So it's been a great state. That will go recreational, we believe, in 2023. We believe there'll be some really interesting things coming out. So that's really exciting for Jushi. Illinois is a state that is probably considered the best recreational market. We have 4 super stores there. I mean, they're just amazing. They're some of the highest performing stores in the state. We're probably doing something like $80 million run rate revenue annualized just out of our locations in could be north of 80 million in Illinois, which is a big number for 4 stores. Virginia, we call the sleeping giant. Virginia is an amazing state. It's all Democrat. It's the governor's Democrat, the state legislature, everything. Even the federal senators and the Congress people are primarily Democrats. All this, so it's a Democrat state, and it's gone from a sleepy medical program to one that's adding flower. Sleepy because it just started. It just started in the fourth quarter of 2020, so it's brand new. And we have huge upside in Virginia, but the market's just getting going. And then in the fourth quarter or maybe late third quarter, I forget, they're going to add flower. We're able to. It's already passed. I just don't know when the start date is off the top of my head, but I believe it's definitely early fourth quarter, if not late third quarter. That's a great state. We're vertical. We have the exclusive right to sell into Northern Virginia. So we're the only licensed operator that can sell into Northern Virginia. And we're vertical. We have a 90,000 square foot grow facility we're building out. It's already operational at 30,000 feet. And we have one store open, another one coming in September, and hopefully another one by December or January. And then we'll build out the rest next year. That we have 9 acres of land to actually more than double the size of our grower processor facility to prepare us for adult use markets, which they've already passed the laws going adult use, i.e. recreational, in the early part of January of 2024. So Virginia's, I mean, you look at it, if you buy Jushi stock, in our numbers, you get almost no Virginia, right? Because it's just opened up. And if you look by 2024, it's going to be a tremendous market for us. I mean, it'll be a tremendous market growing every year, but it'll be a very big market for sure in 2024. So I would say, that gives us, probably the highest organic non-M&A growth rate, one of the highest certainly in the industry for years to come.
Yeah, I'm interested to see what happens with Pennsylvania. You said it's a really strong medical market. They have contacted me. I've been following automated pre-roll and joint machines for, over half a decade. In Pennsylvania, I get more calls than anywhere else. So I feel like they kind of know the industry. They know what's going on. They know what they want to manufacture. Whereas like Ohio, they try to do that thing where only 5 license holders could run the state. And I think Florida tried another similar bill. So not sure how those are going to pan out, but I am excited about Pennsylvania just because it seems like a lot of the folks there kind of are driving the trends and they seem to know what they're doing. But I'm curious with you guys, according to Seeking Alpha, being the best performing property sector since the start of 2019 with the 150% increase last year. How is it that you guys are doing that when MedMen is collapsing?
Well, there's some good performing companies besides us, but we've been at the pretty top in terms of sales growth. So MedMen obviously had a lot of issues. So we don't compare ourselves to them very much. But so we chose good states, right? If you look at the top 3 states that we have, they're great states: Pennsylvania, Virginia, and Illinois. Nobody would argue with that. And then the other states are fine states. Ohio, a little further behind, maybe a couple years behind Pennsylvania, maybe 3 years. So it's coming. We have a small investment there. You need to be there early to get, figure out your acquisition strategy. And Nevada and California, more developed recreational states. We're learning a lot about recreational. I think, California said 5th largest economy. It is the largest cannabis market in the world as a state, period, end of story. Largest cannabis market in the world. So, we did a great job of picking states, and our growth rate right now, we grew revenues 30% from the fourth quarter of 2020. So that's, the end of December of 2020 to the first quarter, the end of March of 2021. Our revenue quarter over quarter grew at 30%, or maybe 28%. And then the quarter before that was 30% from the third quarter of 20 to fourth quarter. So we've consistently been putting up these big numbers. It's going to dip down a little bit in Q2 of this year. The growth rate, not revenues won't dip, but the growth rate will, just because of the cadence of our opening stores and bringing on square feet of grow. But that'll really pick up toward the end of the year as we bring on. We have currently open, I believe, 18 stores, and we're adding 10 more or so by the end of the year, not counting acquisitions.
Okay, so I read somewhere that you guys are going to try and double the amount of retail you have within 18 months. So it looks like you guys are already not.
Yeah, we're. I think that's correct. Yeah, I think actually with the acquisitions, it'll certainly double. Yes.
So that's a great question, though. How much is that going to be from acquisitions, and how much is it going to be from ground up? And
I think we can get to double, not much with acquisitions. So I think right now we've opened up, if I remember the numbers correctly, 4 stores this year. So that means if you go back to the beginning of the year, we would have had 14 stores open, and then this year we will have opened about 14 stores. So it could. I mean, 18 months. We certainly will get there, but we'll certainly double our store base organically in the next 18 months. Yeah. So. And then acquisitions will get us beyond that. But from this point on, now we have almost 18 stores open, right? So I think we're going to open another 10 this year, right? That gets you to 28, okay? And then that means I need to get to double at 8 more stores. I know I'm opening next year 4 more, I believe it is, in Virginia, right? 3 or 4 more. So that gets you very close to doubling it just with that. So we just need a few from acquisitions to double it again from this point on. So we're on a rate of doubling our stores. We keep doing that. And I think that's driving growth rate. The other thing, to answer your question about what makes us, a high performing equity security and a high growing stock in terms of revenues, is we're bringing on massive amount of cultivation space in Pennsylvania this year, and we have planned to actually do more of that next year in Pennsylvania. And in Virginia, we're doing the same thing. So we're growing our cultivation footprint and becoming quite a big vertical state in 2 of our 3 top markets.
Is that part of your main strategy? There was an analyst that said that he expects a $50 million revenue jump. Is that going to be the bulk of that coming from cultivation, or is it going to be a combination of cultivation and your retail expansion?
Oh, no, with all those stores, it's definitely both. It's definitely both. Yeah. But yeah, I mean, we are a company that started out, I would say, retail first, meaning we did retail acquisitions first. And we did that because we thought they were more valuable licenses, because you have the NIMBY effect, not in my backyard. And I think we were proven correct in Pennsylvania as an example. I mean, around the country, but I think Pennsylvania is an example. Because if you look in Pennsylvania, you can't even buy a retail license right now. I know there's a bunch of companies like Cresco that love to own more retail, TerraSend, and there's no acquisitions to have. And the prices have gone way, way up. We bought 18 stores for $80 million. I think the market value of those licenses now, is hundreds of millions, if not $500 million. So we were right on retail. Meanwhile, we bought an underperforming grower processor last year with a cash tight parent last year for $37 million in Pennsylvania, that we're expanding next year to 190,000 square feet and then potentially doubling that again if we decide rec is coming and we want to make that kind of investment. So there was no question that retail was a better way to go first, and now we're doing vertical integration wherever we can. We'll be vertically integrated, we think, across all our markets eventually.
So you won't go to a place like Washington State that's not vertically integrated?
No.
Would you go to Washington State if it was?
No, we won't go to Washington State anytime soon. It's Washington and Oregon are two states that we haven't spent a lot of time on, and it's not that we couldn't make money there. We just don't know them that well. If we went into a mature market, California is considered a mature market. So our mature play is California. The reason why we like that is because there's limited licenses in certain retail jurisdictions. Like, for example, we own a store in Santa Barbara. There's only 2 other stores in Santa Barbara. Santa Barbara is a great place. There's a university. There's 9 million tourists a year. There's a bunch of dry counties around it. You have Montecito next to it. So Santa Barbara is great. So, we think there's opportunity to get limited licenses in California. And we're looking to do, we have 2 open in Santa Barbara and Palm Springs. And we have 1 in Grover Beach that we hope to open in September. And then we have a 4th in Culver City that we won a license that should open next year in Q2. So we have 4 dispensaries. We hope to take that to 10 as our next milestone at some point next year. And it's tough to do deals in California. I mean, there's a lot of legacy folks that haven't been paying their 280E. There's some regulatory violations, so you don't always close the deals you start to close. So we keep pushing on, and we want to be one of the biggest retailers in California. We also think we could go vertical. Why would we go vertical in California? Well, there's great genetics out there, which for the long term can be very helpful. There's great talent out there, and so we think, like a premium flower company, for example, could fit right in with what we're doing around the country, and we add and cross-fertilize talent around the country. So that California is our mature market play. I'm not saying once we grow out all of the sort of more limited license states on the East Coast and the Midwest, so we wouldn't go to other states that are more mature. But right now, we have our hands full with all the growth that we can manage, really, without going to Oregon or Washington.
Yeah, it'd have to make financial sense. I think Willie Nelson left recently from Washington. It just didn't make financial sense for him. And I know a friend who gave back his retail license to the state because he couldn't do anything with it. He couldn't even sell it, so he just gave it back. Whereas in other states like Arizona, where it's much more speculative, a license for a single location could go as much as $25 million. So there's better places to go, I think. But you on your website, it says opportunistic acquisitions and then distressed workouts.
Yeah.
So I'm curious what that means to you guys.
So I have a background. So in the hedge fund business, I operated the distressed world for a number of years, and I helped to take over companies that were not able to pay their bills as they were coming due, and turn them around. So we have that as a core skill competency. I hired a couple of folks who used to work for me in the hedge fund world at Jushi, so we're as good at acquiring stuff. There's a lot of cannabis companies right now with 280E taxes, people who've overexpanded, who just are they have good asset value. They'll get paid well, to sell their companies to companies like ours, but they can't really generate much of a profit. And so we can take that, do a better job of buying, better job of expanding and putting money into it. Typically, it requires money and talent. And so, we've done that. Almost every acquisition we've done has in some way or another been a build out or a turnaround. So for example, when we started in Pennsylvania, we bought 2 companies with 15 store licenses, right? And there were only two open. And now we're at 4, in Pennsylvania, we're at 12 open. So we're building out. Is that distress? Well, they didn't have the money to build it out, so they had to sell. So yeah, I mean, it's kind of is, kind of isn't and kind of is, depending how you want to look at it. Illinois, we bought assets that might have been doing $7 million of revenue at 2 stores. We flipped those medical stores to recreation. Now we have 4 stores doing like 80 million. So you tell me, were they distressed? No, but did they have the money to invest? Were they running them the right way? No. So yeah, I mean, so each, and then I think the best example is in Pennsylvania, the grower processor. We bought a grower processor and we bought 3 dispensaries for $42 million, 37 for the grower processor and 5 for the dispensaries, right? And I mean, when you look at the multiple that we bought those for, once we developed those assets, it could be 1 to 2 times EBITDA, which is really, really cheap. So is it distressed? That one, I think so. I mean, nobody should really sold that cheap. So yeah, I mean, we've been executing on that, and I think one of the plays on Jushi, I think there's multiple ways to look at Jushi and say why would I want to invest in Jushi. One is we have great states. 2, I think we have a management team that's done a good job and has to continue to execute, but it's done a good job. And we built out management. We were actually a management first company. Remember I told you when I got into this, I got in because I didn't think there were any MSOs that had great management that I could invest in. So we created a team around that. So you get that, you get our state footprint, which has, I think, the growthiest profile of any company. Virginia, almost no revenues now, going to rec in 2024. Pennsylvania, hopefully a half built out medical market, going fully built out and rec by the end of by sometime in 23, maybe the beginning. So you have 2 huge things going on in our company right there. But on top of that, we have the capability to bring in very, very accretive acquisitions. And we've shown our ability to do that with 2 deals recently. One was that deal in Pennsylvania I'm talking about, the grower processor, and retail that we bought last year in the middle of COVID. So we signed the deal in COVID, we diligenced in COVID, we financed it in COVID, and we closed it in August when COVID was still flying high. So I think and they needed the money, and we were able to raise that money. So I think that's a good example. The other one is in Massachusetts recently. We bought Nature's Remedy, signed a deal. It's a company that we're buying. That has very good expansion opportunities in the wholesale market, and we're picking it up at 3.5 times EBITDA. Tremendous accretive acquisition. So with Jushi, you have this platform where we can add this cash flow stream onto our existing general administrative expenses so we can do very accretive deals because we don't have to really build out the management team that much anymore.
Mm-hmm. I'm curious with your M&A strategies. Obviously, the states that you're in are, with the exception of California, are smaller states, Pennsylvania and Virginia, Ohio, in terms of patience, and the cannabis market as a whole isn't totally mature yet. So I like to ask a similar question to all of my guests about M&A strategies, looking at a place like Oregon versus Oklahoma. So Oklahoma has 7,500 licenses. Oregon has half that. So after you're done building out and you start looking at, maybe the West Coast, what would you look at? Would you look at Oklahoma, or would you look at Oregon, or either?
I actually can't speak to that with any particular authority because I don't know either of those markets very well. So we're constrained right now in doing deals. Right? We can't do everything that's in front of us. Why are we constrained? The amount of capital we can deploy and our management team can only take on so much at once. So we have a lineup of states we want to get into before those states, and those are the ones we're educated on. So I think for Jushi, Nevada, Illinois, California, Ohio, those are all like big target states for us. After that, we'd probably be really interested in states like New Jersey, New York, Maryland, So we have a bunch of states, maybe Florida, So we have a bunch of states we're looking at that just we have such a conga line of things to build this to as large a company that's out there. We won't get to those states for a long time, so we're not very knowledgeable.
Mm-hmm. Are you guys able to utilize sale leaseback options? Are you using the capital being publicly traded? What tools do you have, being that banking and finance is limited to the industry?
So we have a sale leaseback facility in Pennsylvania. We inherited it, and I don't think we're not looking to take down a ton more of those because they tend to be long-term more expensive if we go federally legal because you can't refinance those. So it's an option we have that we utilize strategically, but we prefer equity capital markets first and then a corporate debt deal at Jushi level second, and that's really our third option.
Okay. Sounds good. I want to get into your first quarter earnings. Can you tell us a little bit about an overview on first quarter financial results?
Well, we're announcing those. We've pre-announced those, but we're going to a full announcement in a few days. The first quarter, we grew revenue. We gave out revenue guidance, and we grew revenue about 30% from the quarter before, and that was basically due to the Illinois stores that we opened up in January, and it was January and December. And then we added another one in Pennsylvania. We had great organic growth at our existing outlet. That was the major reason for that 30% quarter-over-quarter growth. So it's pretty straightforward. And our numbers continue to be fairly straightforward. We keep opening up a lot of stores and adding stores to the cultivation.
Can you tell us a little bit about 2020 earnings? Looking at the current price of your stock at the Canadian Stock Exchange is about around $7.10. Earnings per share is negative $1. But when you're looking at your enterprise multiples, it's relatively cheap. If you have sales that are actually ready to soar, like you're mentioning, those growing pains are going to go away really, really quick after those are released. What's for the investors that are looking at, when do you anticipate to having those released?
Oh, the numbers will be released this week. We got our audit done. We had a little bit of a snafu with our old auditor. We announced that we're moving to a new auditor. I think the old auditor was basically substantially getting out of cannabis and reducing our exposure, and they just were overcommitted and they couldn't get our numbers done. And so there was very few adjustments, and it's not that complicated. It just took about a month longer than it should have. Unfortunate. We don't like to see that happen. We're going to do an investigation to see if there's, any internal reasons why that happened. But the biggest reason is the auditor just couldn't get the job done. So we switched to auditors, subject to the vote. Our numbers going forward is the way you want to look at Jushi. I think if you look at a growth company, if you look at the great growth companies out there like Zoom Video, you don't look at Zoom Video in 2020 or 2021. You're looking at Zoom in 2024 or 2021. And I think people have to change their perception to look at cannabis not in 2020 or 21, but really 22 to 24, 25. Our sales are growing that fast. We're just a huge growth company. And when you look at those out years of EBITDA, the multiples are very small. They're right now, you're talking about, single digit and maybe even lower single digit numbers, depending on how far you go out in the spectrum of years. It's an inexpensive stock that's growing very fast. If you look out a few years like it should be.
Well, if we are looking at a few years, we've seen the political landscape change dramatically. You guys are already internationally. What's that going to look like in a few years? Are you guys going to be looking at, marijuana lounges or kind of obscure investments overseas? Maybe not Puerto Rico, but maybe somewhere else. What is it going to look like in a few years with the way that the political landscape is shifting and adjusting in favor of cannabis?
Yeah, our focus outside the U.S. is in Europe, and we're doing this deal in Portugal to build out a big facility there that we own 51% of. I believe that'll be complete and be able to generate revenue for 2022. There'll be a big ramp up in Europe. That'll be years behind the U.S. Was it 2 years or 5 years? I don't know. But we think it's a very conservative program they have over there, mostly just in Germany, medical. And you're going to see other countries like France and UK, maybe one of them goes adult use. So we like Europe. And if you go over Europe, there's more people over there than there are in the U.S., so it can be just you.
REITs and MSOs are kind of giving opportunities for investors to get in without necessarily buying a producer or processor. So it's an interesting play for a lot of folks. And I'm curious how that's going to play out long term with federally at that level. So is it going to continue to offer a positive investment for retail investors with the federal level? Is it going to create new opportunities?
Well, I think the REITs are a more defensive way to play it in a way. It depends on the price they're trading at. I haven't been following their stock to understand if they're expensive or not. But I think the REITs are, once it goes federally legal, competing with banks, so the growth will come down. What's on their books will be on their books. But I do think they'll have a fair amount of capability to get bought out by other REITs, because it's a very specialized asset class where other people might want to, get into, and it might be much quicker to buy some of these REITs that exist versus building it out.
Okay. Any chance that you guys might be getting into the Asian market at all? If you guys are looking to Europe?
No. I mean, Europe is the big game for us. We tend to want to focus on the big games. And in Asia is a very difficult place to do business. Where Europe, they're Westerners, like we're Westerners, and their laws are much more similar to ours, particularly in the UK and the EU generally. So we really prefer Europe, and I think there's 500 and something million people over there, so there's plenty of cannabis to sell over there.
Mm-hmm. What does that strategy look like? Are you going to try to just follow suit what everyone else is doing and just sending cannabis flower through Canada to places like Germany, or are you guys going a different route with retail focus, pharmacies? What does that strategy look like for rolling out a European brand?
Our European strategy is very different, than what's out there. We are just building a facility in what we think is a low-cost, most politically stable region, which is Portugal. And the facility is built over there, and we'll sell the product in the EU. It'll be grown in the EU. We have no desire to export from North America or anywhere else to the EU. We believe, like most farming, it tends to be protected by the continent. We think that it's going to be much more favorable to be close to your market, and the costs are very reasonable in Portugal. Portugal reminds me a lot of California. The sun likes to shine. Greenhouses work well, and outdoor work well. So I don't see any reason to go outside the EU, to be honest with you.
Okay. Yeah, I mean, there's probably some smart individuals out there, but it seems like through your acquisitions, you're already picking a lot of that up. You mentioned California being a lot of top talent. Definitely some great cultivars, some strains, genetics being out of there. What's the advantages of your acquisitions? Is it the people, or is it the IP? I mean, if you had to just kind of nail it down to one thing, you have these accretive deals. What's the number one thing what's the number one takeaway from all of these mergers?
Well, I think each deal is different. So when we bought Pennsylvania retail, we bought licenses basically. So we had pieces of paper effectively, and we bought the grow processor. We had a piece of paper with an existing operation that was already built out. We did an acquisition in Colorado that was just IP and talent. We needed our own cannabis talent, so we have our Cannabis Center of Excellence in Colorado. We're not in the business of Colorado. We don't sell anything in Colorado. We have an office there, a headquarters office. That's our center of excellence. Now, looking at our Massachusetts deal, we think we got talent, we got cash flow, we got expansion capabilities, and we got a license in 2 retail and 1. So we got all of that. So as we go forward, we feel it'll be different. If we do California cultivation, it's going to be related to genetics and production, cash flow, and talent. So we're not going to do it if it doesn't have all that. Each deal is different. And we're still doing license deals. Like Rover Beach, we announced that actually this year too. It's a small deal. I mean, now it's Palm Springs. Those are 2 dispensaries in California. We basically bought licenses. So we still just buy licenses. Those are the most immediate deals when you buy a license, because you're not buying cash flow, so that they're not valued that high. So each deal is different, and we have the flexibility to focus where we want to focus.
Mhm. Now, is Colorado too competitive? Is there too many players? Is that why you've chosen not to get in there?
I would say Colorado is probably better than Oregon and Washington, and there could be a consolidation strategy there sooner or later.
Mm.
Again, it's not one of those markets that we have prioritized. You haven't seen a lot of MSOs get into it. Columbia Care has, but there's not many MSOs that have gotten into Colorado. So I think when you look at how you value cannabis companies, I think there's a relationship between your growth rate, right? Your growth rate of sales and earnings relative to your multiple. The higher your growth rates, the higher multiple you're going to get. If I take on mature states like Colorado without a strategy to grow it, which would have to be through roll-up and acquisitions, because it doesn't grow organically nearly as high as Jushi's revenues do, I would lose my growth rate would come down. So that's something that would, although it would be accretive to us likely, it wouldn't be strategically, I think, what our investors are looking for us to do, unless we had a way to, really bolster it, likely through just rolling, a bunch of dispensaries up or something like that. So that's how we would look at getting into it like that. But I think we're years off from that.
When does that apex occur for the opportune time for you to look at markets like that? Because with capitulation or forced mergers, the consolidation is right now, but I feel like it's just kind of the beginning of a massive market consolidation. When do you anticipate that to kind of be full, like come full market, and have a lot of these failures that we've been anticipating?
Listen, I think that in Colorado, as an example, Curaleaf's doing the deal there, outdoor grow. And I think you're likely to see companies like Curaleaf, who's pretty full. Their footprint's full. Their growth rate's going to be probably much lower than ours because they're not going to grow much by acquisition. They're mostly an organic growth company. So companies like that, I'm not saying that they're going to go do more of that. But their ones are more likely to be in Colorado or Washington or Oregon sooner than us. We have much more growth related to acquisitions in markets that have much more organic growth in the market. So you buy it, and that asset can go on its own in that market. That's where we're focused. Other people, I think, will get focused on those kind of markets. I mean, Columbia Care already bought in Colorado, big acquisition too.
Well, what's next? What does your crystal ball say that's going to happen in the industry moving forward, 2022 and beyond? You have a crystal ball that you feel like explaining? Or
So yeah, I mean, I don't think my crystal ball is better than anybody else's, to be quite honest. I mean, there's a lot of smart people looking at the industry, but I think the federal legalization is there's a range of possibilities. I think the Senate Majority Leader Chuck Schumer is going to put out the Bill of Bills, a really big one that's everything in it. We'll see that. We'll see where that goes. I think the federal side of it's a little bit like a black box. You don't know what's in that box, and it's harder to judge. But I do think it's a question of time, not a question of if. So it's just a question of when it becomes federally legal. I would say that my base case is more likely full legalization is somewhere between 3 to 5 years as opposed to sooner, and it may not even happen in that time frame. But sooner than that, you'll hopefully get to more targeted things like banking reform, which would help the industry out, like tax reform. So we'll see how it goes. But the full kahuna of descheduling could be many years off.
how would banking help the industry?
Well, right now we don't get much bank debt by federally chartered institutions or even regional banks. We were at a regional bank recently, and the team at the bank wanted to do a very appropriate loan, and they got up to their CEO and he shot it down. That's the second time that's happened to us. It happened a few years ago as well. So you don't have access by and large to bank debt. There's a little bit out there, very little. In other words, you can't take credit cards. If you look at paydays, our sales boost up around payday and a few days after, because people can't buy on credit. So credit cards will help out. But better payment processing. Also, banking reform may allow us to get directly listed in the U.S. Now we have a ticker symbol over here. We trade over here on the OTC, but it's not a U.S. listing. A U.S. listing would open up our investor base. I think banking reform might cause some investors who aren't currently investing in cannabis to get involved in cannabis. So I think valuations could go up. I think there's a lot of very positive things that can happen.
Mm-hmm. Yeah, definitely. You mentioned California as being, the number one cannabis place in the world. You said hands down. What is going to be not the worst state, but maybe what's going to be the last state to legalize?
So
to be
California
regulated.
is the biggest market in the world. Yeah. So you're saying which is the slow state?
Yeah, I mean, I'm thinking Idaho might be the last state. Maybe not
I tend to focus on big states. So let's talk about big states.
All right.
I think slow-moving states are states like Texas, big state. That's the second biggest state in the country. It's a slow-moving state. I think it could speed up a little bit. There's a company out there who's only 3 licenses in Texas, for example, and they just decided to invest in their license. So maybe that's a sign that the ice is thawing in Texas. There's some reason to believe. So I think that's a state that is late, very late, and might continue to be. Georgia's another one, very big state.
With
the top 15 states, I tend not to. It's not driving our numbers, so it's not something we're focused on. Other companies, again, if you look at a Curaleaf, yeah, they could go out in Idaho and Utah and because they're full everywhere else. But we have a lot of room to run in the larger states where you can really get economies of scale.
So I'm assuming you will jump into Texas. I'm guessing that New Mexico, the eastern part of New Mexico, is going to see a lot of cannabis sales from Northwest Texas, kind of going across the border, buying it and coming back. Is that going to be an indicator for you on if or when to jump into that Texas market?
Well, there's only 3 licenses, so I think it takes some reform in Texas where they add more licenses and stuff like that. In Georgia, they're right now doing a licensing thing for 5 licenses. So that market will take some time. You asked me for the slow-moving states. So these states will take years to really get to the point where the market gets interesting on a medical basis, like Pennsylvania, and let alone adult use. So you have years to go, many years.
So I'm in Seattle. I saw the headquarters of Boeing leave to go to Illinois for that 0% tax rate, and probably one of the reasons.
You mean Texas, right?
No, Boeing went. Their headquarters for Boeing went from Washington State to Illinois.
Oh, okay.
And Illinois ended up legalizing cannabis shortly after that because they probably didn't have any tax revenue. And so I'm just curious: is that an issue with other states you're looking at? Kentucky being the number one most underfunded pension plan in the country, even though Chuck Schumer isn't going to do anything about it. Is that going to play how broke these countries are? Does that have anything to do with the legalization we're seeing in Virginia and New Jersey and some of these other states?
Yeah, I think, listen, I think they all want the tax revenue. They can all use the tax revenue. So I wouldn't say how broke are they. I would say, like, I don't know any politicians that wouldn't spend more money if they had access to more money. So and then I think, but the more likely case in states is that, they have some things they want to do, or they have some gaps they want to plug. Now, COVID caused the gaps to get big, but there recently was a federal bailout, so to speak, where the Fed sent a lot of money to the states. But that's a one-time thing, the federal money, and then after they cycle through that over the next 12 months, they'll get back to reality where they have to balance their budgets. And so, yeah, I think that's a big factor in moving it along. But I think it's going beyond that. There's also, like in New York, there's also something to do with popular opinion. I think that if you look at the swing states as an example of where the real rubber meets the road in terms of popularity, in Florida when they did the medical bill, it got about 70% of the vote. In Ohio, they had like 63 to 65% of the vote. Those are swing states. Those are real swing states. So the people are clearly for it, and now the horses are out of the barn. 65 or 70% of the country lives in legal states, So the federal government's way behind it. Some of these state programs are pretty far behind. New York, for example, was way behind. They had an awful medical program. Now they're jumping right to recreational, but they were way behind. Cuomo didn't want it for a long time. It's pretty well known. So you really have to look at this and say, yeah, the tax revenue is important, but popular opinion has gotten to the point where it's pushed some people who have a dim view of the cannabis industry because of their own personal beliefs, outdated beliefs, I'd like to point out.
Mm-hmm. Yeah, I know you guys are looking at big states. I don't think that DC really counts as a big market, but I think it would be nice to put a couple of stores right across the street from the White House and just to show them that there is a demand. I don't know if that would help at all, but that would be
yeah, no doubt. But listen, DC would be great for us. That would be very strategic because we're in Virginia. We hope to be in Maryland, so DC is quite strategic for us. So we'd love to see that stay. They have a weird law there. I don't even understand it, but it's not a big market.
No, not yet. But I would love to see you guys there as well. So we've talked about a lot. Is there anything that I left out that you want to cover?
I think you did a great job asking the tough questions. So I appreciate the opportunity, Josh.
Likewise, Jim. All right. Well, I guess with that, we're going to roll this one up. I want to thank my guest, Jim Cacioppo. He is the CEO, chairman, founder of Jushi Holdings. Appreciate you being on the Talking Hedge.
Great. Thank you, Josh.
Thanks, Jim. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.